response for my recent videos. In this video, we would like to discuss a few topics related to transaction monitoring. Starting from this video, maybe upcoming videos will be mostly on transaction monitoring. The transaction monitoring will be very interesting because it involves live case studies, and also we can explore how the money laundering is being done, because we have seen like recently many banks are being fined for breaching the money laundering laws and acts. So it will be very interesting if you pay attention, and this will be the base video where it will be helpful for the upcoming videos to understand much more better. So getting into the video, I would like to discuss about investigation. This is very simple. Investigation is of two types. One is investigation done by AML specialist in a bank or financial institution. One is investigation done by AML specialist in LEA, law enforcement agency. These are two different types of investigation. We'll discuss one by one. First, looking into the investigation done by AML specialist in a bank. Before I explain about the investigation done by AML specialist, I have one request. If you're watching this video for the first time, please do subscribe. And because I observe everyone, like most of the people are watching my videos but not subscribing to it. If you do that, it will be a very good favor to me. Okay, let's start with the investigation done by AML specialist in a bank. Even though he does some investigation, we don't call that as an investigation. We'll call that as a review of a customer, because the analyst have very limited access to the customer's data. He only have the data, historical data of the customer starting from a year or 2 years or 3 years, but he doesn't have and he also have I'll tell that with an example, because transaction monitoring is all about examples. Okay, before we get into the example, I'll give the base, the golden principle. We can call it as the golden principle, how transaction monitoring works. Transaction monitoring works on two factors: nature of business and the activity. Whenever we say nature of business, it is the nature of business of the client which your investigation on. And also activity is referring to transaction activity. Transaction activity is nothing but the transaction that were being made by the client. For example, if you are working on a client who is in the textile industry, and how do you know he is in the textile industry? Because during the onboarding, he will give you some information that I want your bank account to run my textile business. In order to know more about nature of business, why nature of business is being corrected during the onboarding, I have already made a video on it. 4 factors how the banks assess the risk of a customer. I will leave that in the description, or you can find it in the iCards, so you can watch that video. About why nature of business is collected during the KYC. It will be very more helpful for you to understand what is nature of business and why it is being collected during the KYC. Okay, now getting back to this topic. We collect the nature of business during onboarding, and the customer has given that he want to run his textile business. For that, he need a bank account, and we have done all the KYC checks, and we have given the bank account. Now he is running his business smooth. Now we have responsibility of monitor is a transaction in order to prevent money laundering and terrorist financing risk. So he has given is a business as textile business, and he is making payment to many beneficiaries or many other vendors, so we can have that record. So transaction monitoring, as I told you, it works on nature of business and also transaction activity. If the nature of business is meeting with the transaction activity, we make sure we feel that the transaction is genuine. And the analyst will come to that conclusion based on the historical data of the customer. Historical data might be 1 year or 3 years or 5 years, depends upon the risk factors of the bank. Different banks follow different approach. So now, if this AML analyst is reviewing this textile business, he will take the historical data, and he will, based on a few features or rules, based on some triggered points, he will analyze whether these transactions are genuine or not. How do we conclude that? For example, this textile business is making a payment to a color industry or dyeing industry or maybe glue industry, and he'll give the description in the purpose of payment stating that invoice payment. Now it makes sense for us. Okay, because textile industry needs colors to apply colors to the textile and sell it. They sell the end product. So now this textile business is meeting the purpose with the beneficiary. So this textile industry is in the same line of business with the beneficiary. So then we can conclude because the nature of business is meeting the transaction activity, we make sure that we feel that this transaction is genuine, because that's the way how the transaction monitoring works. For example, the analyst is reviewing the client's transaction data, or say for example a 1 year, and he found that there is a one transaction. This customer have sent a payment to some automobile industry, because that doesn't make any sense. Why a textile business is making payment to automobile industry? But it is not suspicious. It is not suspicious, but it doesn't making sense. So we raise RFI, request for information. And if the client responded saying that I'm trying to expand my business into automobiles also, or he gives the details why he's making purpose to automobile industry, because maybe he wants looking for some motor vehicles to transport his end product to the other customers. If he gives a detailed explanation why he is making payment, based on that information we take decision that okay, this payment is genuine. And what if the customer didn't respond back? The bank gives enough time to respond back, even though if the customer is not responding back, then we'll consider this as a suspicious activity, because customer is not responding back. And there are also some activities where we consider that that activity, the transactions are like suspicious for sure, because this textile business is making payment to some donations or to some charity which is not registered or which is not monitored, or if this textile business is making a payment to Venezuela or some high risk countries, because that doesn't make any sense. Because the Venezuela, if you go to Venezuela or Somalia, there doesn't have any connections doing textile business or supplying cotton or supplying thread, because they're mostly in the business of arms manufacturing, arms weapon. That doesn't make any sense. Then this is like a complete suspicious activity, but we can't make that decision. So we file a report called suspicious activity report to FIU, Financial Intelligence Unit. Then they will take care of it. So why this is the reason why we doesn't call this investigation as investigation. We call this as a review, because we only make we only make the guessing game whether this is suspicious or not. We can say a black and white. We only make sure this is, but we can't conclude it, because we only have one transaction of a customer, like say for example past 6 years or 7 years of only one bank account. What if this customer is having other bank accounts also? Because our resources are very limited. Because my bank, I have given one bank account to him, but maybe this customer might be having the other accounts also. So we cannot like straight away give confidently say okay, this is suspicious activity. So we can't judge it, because there are other bank accounts also which this customer might be using it. So that's why we call this like, even though if you are doing some investigation, we don't call it as investigation, we call it as a review of a customer. So this simply the nature is meeting the transaction activity. It is not suspicious, and we'll resolve it as a false positive, or we'll just close the case by saying that it is resolved, no issue, no concerns were identified. And if we need some more information, we raise it to RFI, request for information. If the client get back, well and good. If the client doesn't get back, we file suspicious activity report to FIU, Financial Intelligence Unit. And if we feel that okay, this is genuinely suspicious, then we'll directly raise it to FIU, stating that we have observed some suspicious activity into it. So the case gets closed by AML analyst in a bank. I'll brief you about it, how the case get closed. If the nature of business is meeting the transaction activity, the AML analyst will close the case stating that it is meeting its nature with the activity, so no concerns were identified. If then also the case will get closed. Then if the AML analyst need more information, he will escalate to the senior management asking to raise it to client for the more information. Then also the case gets closed. And if the AML analyst feels that is genuine suspicious activity, then he will directly draft a SAR report and file it to FIU. Then also the case gets closed. So this is the way how review will be done by the AML specialist in a bank or financial institution. Now coming into the second topic, this is very important because into the second part of the topic, investigation done by AML specialist in law enforcement agency. In law enforcement agency, we don't call them as a AML specialist, we call them as a fin crime specialist. Mostly every department calls it as a fin crime specialist. Now there is a connection because the AML analyst of a bank will file a SAR report to the FIU, Financial Intelligence Unit. But how the case will move to law enforcement agency? This is a small connection between. If you understand that, you can apply this connection to each and every case that was being escalated to FIU in organization. Now, for example, now an AML analyst in a bank feels that this transaction is suspicious and he filed a SAR report to FIU, Financial Intelligence Unit. Because I only have is the details of one bank account. For example, we consider the same example which we discussed. This textile business has two bank accounts, bank account number 1 and bank account number 2. And bank account number 1 is which was given our bank, and because we only have the details of bank account number 1. So we find some suspicious activity in that, and we have filed a SAR report to FIU. And then the same way, the other bank also with the number 2 also identifies some suspicious activity, and it also files SAR report to FIU, Financial Intelligence Unit. Because we don't know that, because that is none of our business, because only we gave our account to that, and only the account number 1 is our concern, and we found some suspicious, and we have filed a SAR report to FIU. Likewise, if the customer has n number of bank accounts, like say for example 5 bank accounts or 6 bank accounts, likewise the other banks also do the investigation based on their risk appetite, and even if they feel that other bank accounts are also used for laundering the money or doing some suspicious transaction, they also file SAR report to FIU. Now that FIU has most of the SAR reports filed on this customer, so then they have broader resources to take the decision. So that is why we call it as suspicious activity, but not the money laundering has been done. We only say that this activity is suspicious because no bank has the right to conclude that money is being laundered. Even for that matter, FIU also cannot conclude that. Even though they have multiples of SAR reports filed on specific customer, they cannot conclude that he is laundering the money. They also conclude that this is suspicious until and unless LEA, Law Enforcement Agency, interfere. Now on X customer, there are 5 banks filed a SAR report on this textile business, for example. Now this FIU will have more resources because now FIU has 5 SAR reports, so it has more resources to investigate more and come to a conclusion. So for example, FIU also like done some investigation based on all SAR reports, and it was come to conclusion that it is like confirmation that there is some suspicious involved in this transaction because they have more resources now. They can't make it into conclusion that it is just a suspicious, then they will escalate this case to law enforcement agency. Because see, for example, FIU feel that this is suspicious, they can go to this customer and ask, please show me your accounts and what business you are doing. Please, I want to dig into your systems and check where the payment is being made and what kind of transactions you are being made. They can't do it because this customer will won't allow them into their business to do some digging and all. because they don't have that right. So only who has that right, you need to get the warrant or you need to get the subpoena order to go and digging into this business. What is warrant, what is subpoena we'll explain in detail in coming videos. This is just a base video, because warrant, you understand it, the term, you can remember this as a warrant. But FIU has no right getting that warrant, so it will reach to law enforcement agency. Only they have that right to get that warrant. But before getting that warrant, law enforcement agency also dig some investigation, because they have access to national database. It differs from country to country. We can remember that as a national database. They have access to national database. They have more resources and more information on this particular customer. They also will do some digging and investigation based on the resources, and take into conclusion. But for example, we feel that okay, they have gone to the national database and fetch all the details, all the FIUs from last 10 years or 20 years, and they have come into conclusion that yes, this is suspicious activity. Even they don't have right to that laundering has been happened. Even they also say that suspicious activity has been done, because they don't have evidence. They only can do the digging, the proper materialistic evidence, which that regulatories or court needs. So this now law enforcement agency, with all the evidence they gather, they reach out to public prosecutor. Now public prosecutor he also, because he has some experience in dealing with what the court, the judge or the regulatory needs, because he will be having clear picture in his mind. Because just because that law enforcement agency gathers the evidence, that doesn't mean okay, directly go and file a lawsuit. Even the public prosecutor, he have, based on his experience, he will decide whether this evidence will be enough or not. If the evidence is not enough, he will direct law enforcement agency. We need more materialistic evidence in the form of a document or IP log if they are using systems to transfer their amount. So now this law enforcement agency will reach out to the court to get a warrant. So they'll submit the evidence which they gather, and they'll reach out to court, and we need some warrant or subpoena order so that we can go into their office or locations and we do some investigation. So based on the evidence provided by the law enforcement agency through public prosecutor, they will issue the warrant. Now this law enforcement agency take the warrant and go to their location and check the documents or check their systems, and take the IP log where they collect all the evidence that is required for their to file a official lawsuit. You might have seen all this happens in some kind of investigative web series or movies. The same thing exactly happens here. So now the law enforcement agency get that warrant and search the offices or location, the system, the IP logs and the hard disks, and they get all the evidence, and they go to the again public prosecutor. So based on the evidence, the public prosecutor will decide okay, this is like genuine suspicious has happened and they're doing money laundering. He cannot conclude it. He can only make it okay confidently. Okay, we got the enough evidence. Now we can go and file a lawsuit, and they will file a lawsuit, and the court will issue notices. And in the court, in front of the judge or the jury, the court they will hear both the hearings of the law enforcement agency and also the client, because they'll give a chance to the client to tell him their version. Because in most of the cases, what happened, the client will admit and come to a settlement. Okay, I've done some money laundering and all, because most of the time this is what exactly happened. Because in front of the court, they both listen both versions of the law enforcement agency and also the client, the customer who is being investigated. Based on their both versions and both judgments, the jury will take the decision. Okay, based on the evidence submitted, because most of the cases the client will he himself plead guilty, and he'll come into a settlement. Okay, it happened. It happened. Most of the cases it happens. So once he agreed, or based on the judgment, even if he doesn't agree, based on the evidence, the judge will or the jury will take a decision. Okay, money laundering has been done. Based on the judgment, based on the law enforcement agency and regulatories will also attend this the verdict, the judgment, the hearings will. So based on the judgment, on based on the framework in the regulatories, that they will impose fine. Okay, only a fine or only penalty or the imprisonment or both, based on the documents, based on the evidence, based on the severity of the money laundering. They will take decision. Okay, what has to be imposed. Okay, just a fine is enough or imprisonment or both, based on the seriousness of the laundering has been done. You have been seen that HSBC and SCB, these banks are frequently paying fines for the laundering cases, but still they are doing business. So based on the severity of the laundering, it may happen. Sometimes the judge may go for just a fine or penalty or maybe imprisonment for some years or suspension of some account, because recently we have seen a case where HSBC they have stopped the onboarding of new PEP customers. They are doing the business, but they're restricted to no new PEP customers should be onboarded until some years. So based on the severity, they make some imposing restrictions. So this is what how the happen the background when you file a SAR report, and from SAR report to FIU to LEA to public prosecutor and the regulators. And I hope you got at least a basic overview what is happens in a transaction monitoring. In upcoming videos, we will go in detail about FIU, LEA, or the much topics about how we have to file a SAR report in detail. And I think this video is little bit lengthy. If you feel this video is very helpful for you, give a thumbs up. And if you want to know more about future topics, you can drop down in the comment section. I'm very